Alright, gang. It's your boy Nature, aka Nature. Alright, so gang, you already know what time it is. Back for another video. Alright, so we just went over Japanese candlestick cheat sheets. So now we're going to go over candlesticks with support and resistance. I got a lot of more content for you guys. A lot of information still. I'm glad you guys made it this far with me so far. I hope the information really helps, because information is everything. Alright, so let's get right into it, gang. So we have candlesticks with support and resistance. We just ran over the cheat sheet, so you guys should be familiar with candlesticks and the patterns, the single, triple, and double, and the double, the single, triple, and double, the single, double, and triple candlestick patterns. You guys should be familiar with all of them. All right, by now. So in this lesson, we will be looking at basic Japanese candlestick patterns that we discussed it earlier in the previous lessons to make some sound decisions in trading. Remember, candlesticks are useless on their own. You must always consider the market environment and what the price is telling you. But before we begin, just a few words of caution. As with any technical indicator or tool, if candlesticks point to a reversal or a continuation, that does not mean it will always happen. This is the Forex market, and nothing is set in stone. This is why we guys want to be very, very good at, make sure that you understand when the market is reversing and when the market is, when to get in a trade, when to exit a trade. So you'll be more familiar. Because sometimes just the candlesticks, we just can't go off basically what they're saying, just candlesticks. We have other technical indicators too that we use and that you will know about, later on in, more videos in the future. But if candlesticks point to a reversal or a continuation, that does not mean it will always happen. This is a Forex market and nothing is set in stone. Usually candlesticks with support and resistance, using candlesticks with support and resistance. So let's learn about how to use candlesticks with support and resistance. The simplest way to use candlesticks with support and resistance levels is to basically support and resistance level determine areas where buyers and sellers are set up their defense. Okay, looking at how candlesticks react to them will help you greatly predicting where price will head next. So we look at candlesticks and we look at their resistance support. Like I said, the resistance support level determine areas where buyers and sellers have set up their defense. Looking for possible reversals in the market. So looking at how candlesticks react to them will help you greatly predict where price will head next. So here's a Forex world example. In this scenario, you can see that there is a resistance around 1.900 level. You badly want to enter, but you decide to wait because the candle that touches this level is very bullish. Okay, you're not sure if it's going to break. Okay, so as you can see in this picture right here, price is at 1.9400, and we wanted to see if it's going to break any higher. So let's see what price does. 2 candles later, you spot a nice 3 inside down candlestick pattern, which is considered a very potent bearish signal. Using the formations as a sell confirmation, you go ahead and the short pair, and you enter for a short pair. Since you're a smart trader, you set a stop loss above the resistance. See, we could have entered because right here it makes a 3 inside. What is it? A 3 inside down. This is a 3. It's a triple candlestick pattern right here. So once we see this triple candlestick pattern, this was the last example. It still was at 1.90 before it made the 3 inside down. Once it made the 3 inside down, that's a bearish triple candlestick reversal pattern. So once it made the 3 inside up down, the first candle was always going to be the overall trend by the second candle, and the third candle closing midpoint of is midpoint opening and closing it below the third. This is a 3 inside down formation. Time to sell, time to get in for sales. So your stop loss is above the last resistance. So price rejected. This is also like the tweezer top, as you can see but it is a a 3 inside down formation. So once we got the confirmation that price actually wants to go back down, it made a 3 inside down formation on top of resistance. It price pushes back down, not only to, it pushes all the way back down so far from 1.90 to 1.4600. 4600. It was at 1.900, and it went all the way to 1.600. So that's a major move right there. That's a lot of pips. So let's see what price does after that. After it makes this candlestick pattern, this triple inside down pattern. Because of your high level of patience, you know that the knowledge of the candlestick formation means, since you already know the knowledge of the candlestick formation, this is clearly reversal pattern, 3 candlestick reversal pattern, and we already went over. You have greatly increased your odds in favor. Let's see what happens after you short, after you went in. If you would have gotten after it made that inside down formation, there's a bearish triple candlestick formation, you would have made a lot of profit. You would have made almost 1,000 pips, 800 pips in profit. Kaboom! So the pair almost immediately goes in your favor, and you're in the nets of hundreds of pips, even 300, 400 pips. So you go to the nearest car dealership and you buy yourself an exotic car, okay, and a sports car, and a jet with matching colors, okay, so because you don't understand how to trade in this market. All right, so this is the whole point, gang, to help you guys trade. Is you already know, and other notes too, we can measure the distance of how the trade will go from the last low to the recent resistance. It also made a double top formation. A lot of candles, a lot of formations, a lot of times that price, we could look at it and say price did a few things to help push this momentum down. So we're all in profit, at least 800 profit. I wanted to zoom in and show you, once it made this 3 inside down formation pattern, price went all the way down to 1.4300 from 1.900 and went down to 1.300. That's almost like 600, 700 pips right now, and it's still going further and further. So also immediately goes in your favor for a net of hundreds of pips. You go buy a matching car and a jet and matching colors. You might be thinking, why do I have to have pair supports and resistance level with candlesticks? I could get a lot more signals with just candlesticks and make more money. We trade at resistance and support levels. Okay, you buy at the top, you sell at the top of the resistance, and you buy at the bottom of the support. To answer that, take another look at the same chart scenario, but this time the only difference is we have taken the liberty of highlighting some potential trades, since you're solely focused on candlestick formations and not the overall picture, which is we may sound trades at the top of resistance and support levels. Okay, so this is what happens when you just go off of candlestick formations. So let's take a look and see how you would have lost a lot of money, because you would have thought it was going down, and we should have waited to see what overall price wanted to do before heading in that direction. So this is what happens with this trade. If it trades on those candlestick formations alone, you will have lost every single time. And in this picture, you just use candlesticks alone. This is why we use moving average, which we will be talking about, SRI, which you will know how to do, Fibonacci. It's other technical indicators other than especially moving average crossover, that helps you to understand the direction of the trend and overall trend, other than just trading off of candlesticks formations. So this is a hammer, a single hammer. When you see a hammer, it means that it's a bullish. So you're thinking price is going up, but no, price has that down and stops you out. And then you see an even star right here, and an even star is a bearish confirmation that price wants to go back down, but no, price reverses and heads back up again and stops you out again. Alright, so then that's how you like basically lost every time. You thought price was going to continue, like you can't just go off the candlesticks. Obviously, we know this one was a 3 inside down formation, so that's why price went down in this direction, as we already went over, and it went down from 1.9900 to 1.300. So we already know price did that through the 3 inside down formation. So of course that was obvious, but the other two, the even star and the hammer, because those are, I used to make those same mistakes. Oh, a hammer, and that we have to look at the overall trend, and we only trade at resistance and support levels, truly. So let's go back out of this picture. And if you trade on those candlestick formations alone, you have lost every single time. By simply pairing candlesticks formation with support and resistance level, you have increased your odds of winning. So it's important that you look at it with how price is. You look at the candle formations at the top of the resistance and support levels to see what price is really was doing. If price makes a 3 inside down on top of resistance level, it's a clear bearish candle for bearish reversal pattern. So let you know that price wants to head back down once you see that. So you have to look at the top of the resistance levels to really understand what price is doing. Okay, so this is just a quick video. Alright, gang. In our next video, we'll talk about common mistakes that traders make with Japanese candlesticks. Alright, so gang, this is candlesticks with support and resistance, how to trade candlesticks with support and resistance levels. Alright, so it's your boy Nature, aka Nature Gang. I hope this video will help. Alright, in our next video, like I said, we'll talk about how to what common mistakes do new traders make with Japanese candlesticks. Alright, so it's your boy Nature, aka Nature Gang.